very good evening to you traders. Hope you had a good weekend. DAX is where it's at today. Look at that daily chart. What a wick to the upside. Okay, the levels to remind us, we've got that top line there, which was the prior high. We've got the middle line there, which was the little resistance level that we'd had back from June. And the lower line becomes more obvious on the 15-minute chart. What's been going on? Well, as we know, we've been butting up against that key 10,360 level. We had a couple of decent trades off that, and there's been plenty of support down there at that 10,290, 10,295, 10,300 kind of range at the bottom of that range. Now what happened? Well, we gapped right up and we just sold off all day long. We didn't even, we had a little pullback down here, but that was way after we tagged the low of support. We had a massive range. High early in the morning, 471, low 275, almost a 200 point range. That's a big old range that we've had for a while, and that really stands out to me. So, it's one of these charts that you just want to print out and frame because it's so technical. It just did everything that the market should be doing. I always like to start with, when I look at the DAX specifically, or the FTSE, or even the Dow, I'm always more interested in the cash sessions. The cash session obviously starts 8 o'clock on the Dow, UK time. The DAX UK time, and we just, it was such a nice chart to look at. Let me just bring in what we had at the open. We opened up, we pushed down, and it was not a lot going on, but the key thing was that we were above that resistance level. We're above that key resistance level. So when you see that, you sort of say to yourself, what is going to happen now? Where are we going to go? How is the market going to accept being above here? And 30 minutes in, 20 minutes in, it looked like we're about to push to highs. But again, these failure patterns are the ones that make you the most money. It's not the patterns that are the textbook patterns. It's the ones that everyone piles in on and then gets caught out on at the very best. So it rolls over, and this time, Monday morning, there's no rush to do anything. You just want to see what's happening. We can hit some key levels. The likelihood is going to be some trade today because we've gapped out of a multi-day range into fresh territory, and things are happening across the board. Something is going to happen today. There will be an opportunity, and that's a very nice situation to be in when you're on a Monday morning and there is some movement. You don't need to rush into anything, so just see what's going to happen with everything. We pushed up, flagged down, and this is nice. Pushed up, failed, but then you can see how key that level was because we just held at it for ages. So you can say, yeah, that's a key level. I'm going to keep that level on my chart because the market is interested in it. Participants are interested at that level. Dip lower, failed, push back up, and then you get a double failure. And it's just these double failures that just keep coming out of nowhere. And this is what I like about this sort of thing, right? Okay, this is the sort of thing that I like to look out for. It's one of my bread and butter type setups. You've done all this work, up, down, right? You're pushing now to lows. Here's your new resistance level. We've broken, support level. You've broken through, it's become resistance, and you start flagging underneath it. That is the key to all of this, is that when the market holds above or below a key level, then it's accepting the new price, and the next likely move is in that direction. You see it time and time again across a variety of markets. A bull market, you see it breaking up above resistance, it starts to consolidate above that, and then the next likely move is, it may come and retest it, but the next likely move is it going to be accelerating out because price becomes accepted there. Sellers have suddenly given up there. Buyers are happy to pay up what is considered to be quite a premium price. So we get that, we flag lower, we push down, fill the gap, there's the gap, again, sitting by the gap, it does another leg lower, tags that support level, and to be honest, if you caught that short from way up there, then that's fantastic trade, and there's no reason to be overstaying your welcome on that, and I fully understand why everybody will have taken that trade out right at that lower support level, because it's the support level for multi-days, and you've already done nearly a 200 tick move, so understandable. And then you see this is where the difference comes, because compared to when you're holding below support, you're chopping back and forth, testing, retesting. We've got to push back up to the close, and we ended up closing, actually, the cash close 430 as if nothing had happened. It was completely almost unchanged on the day. We've pushed down later afterwards, so let's see what happens. That's a really weak, really weak chart to have when you've got above highs, and actually it's upsetting that hourly chart quite a bit. So let's see. Big level for tomorrow. I'm running over my 5-minute time, but let's look at this. But big level tomorrow is definitely going to be that 10,300, 10,290, and also right down to the 10,275. We'll be looking for a drive lower, a hold, and then a subsequent short. But let's see. The Dow is obviously affecting this. Let's see where the Dow closes. If the Dow doesn't do much, then we might get a bit of follow through. But the key level is going to be that support. Will it hold or will it not? Let's see tomorrow. Have a great evening, guys. Take care. Bye bye.